Tickers flashing green on Wall Street, traders high-fiving, Nasdaq chart spiking upward. Wall Street just got the news it's been waiting for, and the tech sector is booming. After more than 2 years of inflation worries and rate hike anxiety, the latest economic data shows prices are finally cooling, and investors are responding with a powerful rally. Headlines montage, inflation shows sharply, markets rally, tech shows lead the way. According to the June CPI report, inflation rose just 2.6% year over year, the lowest level since early 2021 and well within reach of the Federal Reserve's 2% target. Economist on CNBC. This is exactly what the markets needed. It opens the door for a possible Fed rate cut, maybe as early as September. In response, the Nasdaq soared more than 3%, hitting a new all-time high. The S&P 500 jumped 2.1%, fueled by a surge in tech, AI, and semiconductor stocks. Federal Reserve building, followed by investors cheering on the trading floor. With interest rates like to fall sooner than expected, investors are peeling back into growth stocks, especially companies in artificial intelligence, code computing, and chip manufacturing. Here's who's leading the rally. NVIDIA rose 6% as demand for its AI chips continues to explode. Advanced Micro Device AMD jumped 5.4%. Apple gained 3% after announcing expanded AI tools for iOS. And Alphabet surged 4.7% as its new AI search model rolled out globally. Servers, AI labs, chip factories in Taiwan and Arizona, Apple Store crowds. The AI sectors in particular is driving a new wave of optimism, with analysts predicting record revenues for chip makers and cloud performance by year's end. AI is the backbone of this rally. The market believes we are at the beginning of a multi-year transformation, and now the macro conditions are catching up. Just months ago, high interest rates were weighing heavily on tech valuation, but with inflation falling and the Fed signaling a possible pivot, investor sentiment is shifting fast. Fed meeting timeline, next meeting September 17. Traders are now betting on a rate cut in September or November, which would lower borrowing costs for both companies and consumers and boost everything for R&D to MAD activity. Other sectors also benefited but not at the same pitch. Energy stocks were flat, financials rose modestly, and consumer staples lagged behind. But tech is back in the driver's seat. Sleek office, robotic arms, code computing diagrams, Nasdaq billboard. Still, experts caution this rally could be fragile. Geopolitical risk, another inflation spike, or disappointing earnings could derail momentum. We are celebrating today, but let's see what the next jobs report and Q2 earnings bring. The market's mood can turn fast. Traders at work, AI demos, Fed officials speaking, slow fade to black with upbeat music. For now, so the message is clear. Falling inflation plus AI boom equal Wall Street rebound. Are we entering a new tech bull market? Or is this just a bounce? Tell us what you think in the comments. Subscribe for more market updates and economic breakdowns.